Hey everybody, things are really changing pretty rapidly here, but then that's why you come to Wall Street Winners, to find out what's really going on. Now I'm going to show you three charts here to start out with. This is what the yield curve was on the 21st of December. The second chart will show the way it was a week ago, and the third chart will show where it is now. Okay, 21st of December, 28th of December, and now the 4th of January. What's happening is the front end of the yield curve. Now I'm going to go back. Look at the front end. Look at the very, very front end. That's the far left-hand side of the chart. Notice how it's slanted upward. Less slanted upward, basically flat. This is a terrible sign for the marketplace. Hey everybody, Courtney Smith here with our January 7th edition of Wall Street Winners, where things are looking poor a year from now. Let's take a look. Let's break it down. Let's break this down, memorize it, tattoo it on the forehead of your kids. Okay, we had a great week and a half here in the market. We had the big rally, the 1,000-point rally in the Dow. On Friday's price action was excellent as well. Let's break down the S&P, and I've added a couple of extra indicators to help us with that. Number one, let's just look at the price action itself. Pretty good, but it's a clear bear market. So all we can consider is that the last week and a half is simply a rally in a bear market. We have to start with that premise. Now let's look at the purple predictor. The purple predictor is running below the price action, which shows that the smart money is not the buyer here. It's the dumb money that's buying this rally, that's causing the price to go up. So we saw dumb money capitulation 2 weeks ago, and we're seeing dumb money trying to buy back their positions right now. So that's not bullish. Let's go down and look at the the volume. The volume is low. Now, obviously, around Christmas and New Year's, you'd expect it to be low, but we're still low this week. Now, next week will be the key because it'll be the first full normal week. But right now, volume is low on the rally, which means that it's a non-sustainable rally. Now, the bottom line is the ADX. And the fact that it's going down is an indication that this is a neutral market. When it goes up, it means it's a trending market. When it's going down, it means it's a non-trending market. So when I put this all together, is that we're in the midst of a rally in a bear market. It's still in a bear market. Let's take a look at the industrials in the upper right-hand column. Got a little bit of relief here. You can see the red line, which is selling pressure, is coming down. So selling pressure is definitely not as strong as it was before. And buying pressure, which is the green line, it's going up. So that shows buying pressure is good. But there's still more selling pressure than buying pressure. Better situation, but still bearish. Nasdaq, pretty much the same picture, except notice here something that I've been saying. The Nasdaq purple predictor is now bullish. Unlike the Dow and unlike the S&P, the purple predictor is bullish for the Nasdaq. Now, small cap stocks tend to outperform large cap stocks during the month of January. The Nasdaq has more small cap stocks in it, so look for the Nasdaq to outperform the larger indices. Now, that may mean it goes down less, but it will outperform. So we went through a long period where tech stocks are being savaged. We're now going to reverse that. Seasonality, still on a neutral signal. I don't have the updated chart, but the updated chart is bullish. Take my word for it, okay? We'll put it in for next week. This is the bad picture here. I said even last week that if we got down to below 25, I'd have to say that's it. We're going into a major bear market. We got down to 15. And if this ever goes negative, then we're definitely going into a recession and a bear market that could go down 40 or 50%. So this is a terrible, terrible picture. Now remember that the yield curve is really a 1-year forward signal. In other words, it's saying next fall, next winter is when the big bear comes and when the recession hits. So that in other words, the bear market we're in right now, it's let's call it a correction. and it's going to turn around and go back up again. But the big bear market's going to be next year. Asset allocation, pretty much neutral, no big deal here. Stock market RISKDICATOR, roughly the same as last week, so no big deal here. Global shares, just not as strong as the U.S. When we get back into a bear mode, we might want to short sell the global shares rather than the S&P. Bonds is where I've been telling you you've got to be long. We told you to get long down around 115. We're up at 122. That's a huge rally already. Purple predictor, microscopically bullish. Everything is bullish for the bond market, and that's one reason why the yield curve is going to flatten. Bond key factors. The CRB collapsing. 10-year treasuries in Germany collapsing. But the gold market is rallying. But 2 out of the 3 indicators, including the most important one, are saying lower interest rates for the bonds. The dollar is coming under pressure, as you would expect if there's going to be lower interest rates. Gold's going higher, although you can see Friday was what's called a key reversal. That's a bearish mode, but it didn't close on the low, so I'm pretty much ignoring it. So we want to stay long gold, and I am long gold shares right now. Our gold indicators, neutral on the top, pretty neutral in the middle, but wildly bullish on the bottom. And that's where gold strength is coming from. That's one of the key factors. Fully paid up members, I give them a couple of more factors. They're also quite bullish for the gold market. Oil, well, I thought it would stabilize. It stabilized finally. I was a week late on that one. But nonetheless, look for a little bit more stability here in the oil market. We've got reasonable stability in Bitcoin. You can see through the holiday period. Look at the daily ranges. The daily ranges over the last 2 weeks have been non-existent. There's really no interest. Look at the volume down at the bottom. No interest. Purple predictor remains negative. The trend is negative. You got to be short right now, and you got to be bored. All right, freebies. Don't forget, we still don't have the new edition out yet. Hopefully it'll be out on in the next day or two, so keep an eye out for this. It's much longer than the first edition, go into much more detail about everything about it. So the original version was really, I just had to get the message out quickly. That was fantastic call. The market has collapsed since I put that out. This next one's going to talk about a little bit deeper, longer, and I think you're going to enjoy it a lot more. All right. Also, check out Stock Butler. You really should be subscribing. And that's it for me, freebies. Fully paid up members, hang in there just a second.